Hi, and welcome to the Rags to Riches show with myself, Terry Blackburn. Now, today's guest is a guy called Jay Howard. He's a very experienced property trader. He's an author. He's an avid reader. He has multiple degrees. At one point in his career, he managed a portfolio worth over 3 billion. Really switched on guy. He has a really creative approach, and he's done some big things in trading for quite a long period of time. So I think it's going to be a different episode. It's going to be a really interesting one, full of knowledge, lessons, and experience. So welcome to the show, Jay.
Thanks, Terry. Appreciate you having me here.
Thank you very much for coming on, mate. I appreciate it as well. So what we like to do, Jay, is we like to talk about your sort of career so far. We'll try and extract as many lessons, key learning points as we can to hopefully motivate and inspire others from your story. So 3 main parts of your career will be the start, just how you got into property and how it actually started for you. The middle part is the growth part, any key milestones, any key moments in your career, maybe there's any catalysts that kicked something off. And then the last part is just what your attention is on right now. So where's Jay going right now? What's your focus on, your attention is on, and then we'll take it from there. So if you could start by telling us a little bit about how it started for you, Jay, that'd be great.
Yeah, I think my family had been doing it. So uncles and cousins that I didn't really have much contact with were big property people. Okay. My great-grandfather owned like half of East London at one stage, died donkey's years, and his kids, I think there were 10 of them, just squandered it and sold bits off, and just a really kind of random story. But it really started because I did the 2 weeks work experience in high school at a local Bairstow Eaves in Ealing. And I still can't tell you today whether I fell in love with property or the 2 women that were training me. I've got no clue, mate. It could have been either way. I think I was like 13 or 14, just having insane fantasies about these like unbelievably attractive, well put together women who were taking me out in their car. I felt like an absolute legend. Clearly, I was just a child that they were kind of making poster leaflets into letterboxes.
Make the coffee,
like
yeah.
That's it. Go make the coffee, little boy. But no, it was kind of like there was a lifestyle with that that I really liked, and I wanted to be a part of. And that really was the start, and it just completely snowballed.
So you went from doing some work experience to doing some big, the managing the portfolio, did that come before you started setting up your own businesses and things and trading? So what was the transition from that to this?
Well, I'd finished my second degree. I was at 17, and my mother had passed away. So I kept the funeral. I think a lot of uncles turned up, a lot of like the long lost family. Now everyone comes up the woodwork for a funeral. You're normally guaranteed a pint of something or a bite to eat for free, and they like out the woodwork. But basically, a couple of them came up and sorry to hear what happened, blah blah blah, and they just start asking what you're doing, and I think they just took an interest in me. I don't think they knew that I'd started my first degree at 11. I started the second degree at 17. I did another one, and I was doing all this kind of stuff. And then they said, oh, what are you interested in? I said, well, I'm interested in this, but I've got some property experience. And well, why don't you come and work for the firm? And it was a group of trusts that had a wealth cap at about 26 billion. And I worked my way up over 7 years to becoming the largest consultant in one of the trusts. So it was about 3.3 billion. And I handled that for about 7 years.
And what was that? So is that your family? Sorry, is somebody related to you? This
someone
is it?
But I mean, this was kind of like I grew up on a council estate in West London. It was kind of like
your family are worth billions.
We knew they existed and we knew that they were there, but it was kind of like one side of the family versus another. I think someone got the needle at one stage and cut someone off, and then it just branched out. One side of the family was immensely wealthy and the other side just were okay or just about floating. Yeah.
So what was that, and how old were you at that point?
I was 17.
And did that get you, you know, you're clearly very intelligent bloke, you know, a degree at age 11 is fascinating to me to do a degree at that age. But like, did that spark your interest in property? I mean, seeing people at that level is inspiring. I like hearing stories like that, but were you inspired? Did that start it, or?
I had a massive hard on for the amount of money that I could have earned. Right, it was just insane, and it was toxic. But it was just unbelievable. At one point, I was earning unspeakable amounts of money. Like it was to come into that kind of money that early on, I think caused more harm than good.
Dangerous.
I mean, I was earning it because I was working like 14, 16-hour days, 5-6 days a week. I was traveling internationally. It was graft. And part of the reason it stopped, well, there was a couple of reasons, but one of them was burnout. You almost killed myself doing that job.
At 17 as well.
Yeah, I mean, by
Wow.
the time I was 20, I was earning 7+ figures a year. And that was just what they were paying me. Because I was family, I was added to the trust. So I was technically a beneficiary. So whilst I'm doing all this work and building up this portfolio, I'm one of the beneficiaries that's benefiting from that work. So I was, you know, on a monster wage, you know, not really commission based, but I was kind of valued on the amount of value I was able to increase to the existing stock that we had, and then how I was able to find other assets and add value to those. So I became a specialist in being able to find assets that were underappreciated, either in value or in utility, and then adding value through some kind of legal or paperwork. And if pushed, it would be some kind of physical or structural work that would happen to the property. So that was where I separated myself from the others.
Wow. I mean, what a way to get into property, right? Getting thrown in at 17 to that. I mean, I don't think I'll have many guests on who have that answer about how they got into property. Fair play. And then at what point did you decide to break off from that to do your own thing, and why did you do that? Because I'm sure a lot of people, if they have that position ready made for them, making a lot of money, they'll just be doing that forever. So did you just want to do your own thing? What was the reason?
Well, no, I think like most things in my life, it's normally women that destroy most of the things that I build up. Not because they destroy things, but because I'm an idiot. And that's unfair. But no, I met my wife. I met my now wife. We weren't married at the time, obviously. And the family didn't really approve for whatever reason that they fancied. They didn't really give me a chance to. They didn't really discuss it very much, you know. One Friday I was at work, and then on Monday I was fired and I was removed as a beneficiary of the trust. Then I started again.
Was that a hard pill to swallow?
Yes, it was. Yeah, I think it took me about 2 to 3 years before I pulled myself out of that quagmire. Yeah.
I mean, if I look at a lot of the guests I've had so far, and a lot of the successful people that I know, majority, not all, but majority have experienced some sort of like adversity in their life that kind of shaped them. Did that have an impact on sort of who you are today, Jay? Sort of going from such a high to then a low to then rebuilding yourself and toughening yourself. Do you think that made you who you are, and do you think it had an impact?
Massively. I like to think it didn't change me too much. But I think for people that knew me before that happened, they would say I don't smile as much as I used to smile.
Yeah,
you know, it's just a small thing, right? If I'm stuck in a conversation, I'm talking, I'm normally quite an affable, smiley person. But they say, you know, some people used to say, oh, it feels like they've broken your smile. And I try as much as possible not to let things like that, because you can let it break you.
Yeah, definitely.
Yeah,
definitely.
You know, you can break, you know, that's allowed, but you can't be broken. Do you know what I mean? So although it broke me, not broken for it. You know, I've not turned cold-hearted, or I'm not overly suspicious or negative, or I still go out there with a good heart and try and do good, and meet people and try and treat them openly and equally. If they decide not to treat me like that, then it's over, it's done, it's finished. And if they do, then there's normally a lifelong relationship or friendship there. So I treat it very simply. I try not to let it adversely affect me too much. And in today's view of myself and my mindset, I don't think it does. It was a really good learning curve, because it just goes to show, even with the stuff that we're doing now, someone could take away your train set. Anyone can do it. There's you look at the restrictions that are being brought in for residential landlords and HMO landlords and all this stuff. It's becoming harder and harder and harder to operate. People can take away your train set. Someone else is making the rules. Do you know what I mean? So once you understand that, I think it's easier to go, right, okay, well, something's changed. This is a problem. How do we adapt? How do we survive? How do we thrive? And I think I think that's the route that I went down. I had to adapt. I had to move into survival mode. Then I had to move out of survival mode to get into thrive and growth, which is where we are now. We're in, that's our focus, striving for growth.
Fair play. And yeah, I've never heard that phrase, take away the train set, but you're right, but you can still build the track, right? Because you've learned how to build a train set when you had it, and I believe personally that, it's getting a bit deep, this conversation, but I believe everything does happen for a reason, and in a majority of cases it does make you stronger eventually, it does, and it makes you, and who knows what's to come for you, and it might be bigger and better things. Everything happens for a reason, right? And obviously you've got your wife out of it, so that's just what I truly believe in. And yeah, just going back to the point is that a lot of people have faced that adversity to some degree, and I think it molds you and shapes you and toughens you and prepares you for the next step. For sure. Thank you for sharing, Jay. That's it's a powerful story, man. So you started up yourself. Did you instantly start trading? Did you go into holding stuff? And what did you kind of get into? And also, why trade and not hold? Out of curiosity.
I had one or two clients that basically backed me. So I started off deal packaging. So I would, not in terms of just finding something and then telling someone they can do this with it. I would be buying something, doing something with it, packaging it up as a turnkey delivered solution, and then selling it on to the retained client. So I had a bedrock of capital available to kind of do that. Yeah. And that worked really very well. And then I realized that I was building an asset base for so many other people, and they had all the aggravation of running it and dealing with it, but I had none of the responsibility. I'm still young at this stage, right? I'm early 20s, so forgive it a little bit, but there's always aggravation. There are voids, there are the police knocking doors down because you hear all these horror stories, and they're not just horror stories. This happens. People set fire to, I've not got the bandwidth to deal with something like that from somebody else. So it basically went from, once I built up a big enough pot, and one of my investors had passed away. He was an elderly chap anyway, and his son took over and was like, "Oh, I'm going to do my own thing. I don't need you." I was like, "Okay, cool, yeah, fair enough." No, I built up enough of a pot to play with, and yeah, there's no hard feelings. I'd known the son for about 15 years. It was family friend, that kind of thing. So I went on my own, and I just started doing maybe 6 or 7 trades in a year. Just one every 6 or 7 weeks. Simple stuff. But random things would happen. Like I'd be driving and I would pull up outside. I'd stop in traffic and I'd see a moving van. And I'd go up and say, "Oh, you moving in? You moving out?" What's the story? "Oh, no. So-and-so is going into a care home. We're just about to put this on the market." So, "Don't do that. I'll buy it from you." I did an exchange and completion within 6 hours without doing searches, without doing anything like that, just literally stuck my balls on the line. I made so much money on that deal, but like stuff happens when you look for it. Yeah. It's kind of like everyone's like, oh, I have to do this campaign, or you know what, if you're there and you're looking for it and you're thinking, right, I have to take advantage of an opportunity, I have to make the most of an opportunity when it comes, because I don't know when the next opportunity is going to come. No one does, right? And that's how the trading really started, because I exchange completed on that. It was super random. It was like within 4 or 6 hours. And I sold it about 3 weeks later. I made like 200 and something grand. It was ridiculous. And then I started realizing, because I sold it at auction, it's like, well, this is magic. There's no chains, there's no decisions in principle, there's no this has fallen down, that's not working, can't do this, excuses that, pull out, I'm moving, my grandmother's converted to something else, and I've changed my whole life. None of that happens. You give it to the auctioneer, it sells, they give you the money, and the simplicity of it was brilliant. And then I started going to more and more auctions, and it just grew from there. Then I got a job with an auction company. That was a number of years later, just because I was trading nicely. I was fairly unknown, because I kind of spread my trading across multiple auctioneers. I didn't really want to be known. So getting a job with an auction company was fairly easy. And then I kind of applied for an administrative role, just thinking, right, I need something to occupy my time. I need to, regroup and rebase, and I'll still do a couple of trades. And I think within a year, I was like behind the guys who own the company. I was the guy. I helped run it. I managed the auctions. I dealt with all the complaints. I progressed everything. It was insane. And that is kind of led me, when I left there because we had our child, my wife, we got a little daughter, and we just wanted more flexibility. We were looking to move out of London. This was just before COVID kicked off. We were like, we need a different quality of life. And that was really the main motivator behind it. Then I did some consultancy for a national auction brand for 18 months. But in between that, 3 years ago, we launched the book. That was an Amazon #1 bestseller. That was really cool. We put a lot of heart and soul into that, as myself and my business partner. And then we've got 3 or 4 companies. I think a couple more than that. He would count better than I would. And we either trade, or we're basically traders. We help people sell their property at auction as well. So we kind of act as an intermediary, a joint auctioneer, to make sure that investors are putting their property in the right auction house or an auction company for that asset to do the best. And that's really our focus. That's where we are now. Where we are now is we're actually opening up another company and another brand, because our route to market is auctions or direct to vendor, or people sending us stuff going, only you guys can really deal with this, and all that kind of stuff, to now we're setting up a property buying company, so like a quick cash purchase company, and we should be launching that sometime this year. And that really should change the number of leads and the volume of our trading, because at the moment we operate small volume, high return, and the next step is going to be high volume or medium volume and still keep the high return. So there are several ways that we structure that, and that all comes down to how we create things, in a creative kind of way, how we structure things in a creative kind of way, that are efficient, that are effective, that gets us from A to B quicker than doing it in the normal way, exchanging, completing, that taking a couple of months, getting it ready to market, that taking a month, maybe doing some refit, that taking a month, then before you know it, we can't be sitting around for 6 or 7 months with a single asset. It needs to be, we need to be in and out within 6 to 8 weeks. And that level of activity and that velocity requires very, very robust practices, and that all starts with how we value an asset, and how we secure it. And yeah, that seems to be going really well.
Just on the trading side, I've got a few sort of questions on that because, like I say, I haven't actually spoken to many people that do what you do in volume and certainly for the length of time that you've done it. So just explain that. What do you look for? If you're looking for a trade, it's just something where you can buy it, lift value and resell quickly. But what do you look for? Is there any specifics, or is there something that you come across quite regular that you look for to do this, or is it not that simple?
We generally speaking, we look for things that make a property unmortgageable to the vast, or either if it's not unmortgageable, very expensive to mortgage.
Okay.
We're looking for assets that are either languishing online for a long period of time, or assets that are not yet on the market. And for the ones that are not yet on the market, one of the things that we do that's really very easy is if a short lease property sells in auction, it sells really well, we will then let drop the rest of the flats in that block that have short leases. You know, because
extend the lease resell, yeah.
And so we that's a really good lead on how we can find assets. We will be looking for assets where we know that if a property goes to auction, it says, oh, this property has Japanese knotweed. The chances are that the two properties either side of it are going to have Japanese knotweed, right? Which means that,
good point.
You know, so then we reach out, we communicate there, and then we can start with like, we then, you know, as we structure that sale, we will be claiming land remediation, and we'll put a works plan in place and do all that kind of stuff. And that makes the next couple of trades or the previous couple of trades more profitable, right? And then obviously you're looking for, you know, a nice medium to nice road, you know, whether that's upper class, I don't know if people class it as that, just a nice road in a fairly nice area, and you're just looking for the shithole. It's that simple.
What does it? The worst street in the worst house in the best streets type
that's
thing.
It. Yeah. You're looking for the thing that goes, oh, no one can be happy with that sitting there. Perfect. That's us. You know, anything where we see something sell at auction and it says, oh, just so you know, there's a boundary dispute. Perfect. We will then write to the neighbour and say, we understand there's a boundary dispute. We'll buy your property and we can solve the boundary dispute. Or where there's a title error or anything like that. That's the stuff that we pick up. It's slightly slower. It doesn't enable the kind of speed that we would like, which is why we're investing in bringing a property buying company on board, and we're building that up. So that will give us our volume and our velocity. Maybe we would have to be a little bit more flexible on our 50 grand minimum net profit per deal, which is, we always make more than that, but that our target is, that's our minimum expectation. If we're not building in that kind of profit at the point of purchase and the value that we create, every deal that stacks is worth doing. But for us, we focus on our time, you know, in the way that we operate. Our time is expensive, so we can't be wasting it doing a deal that's only going to bring us 12 grand because it doesn't make sense.
Yeah,
you know. But someone who's doing BRR or a big portfolio, that 12 grand is perfect because they've built in that equity. They can then refurbish it, rent it out, yield it up, convert it into, do whatever they want to do, and then they can portfolio it. So, you know, there's stuff that's suitable for us, and then there's stuff that just is suitable for somebody else. Doesn't necessarily make it a good or bad deal in our eyes, but it depends on what gives us the greatest return on time.
I think that's a really good point, and you're completely right. Just because it works for someone else, it doesn't mean it's going to work for you. And strategy is sort of individual, isn't it? It's down to that person, and it's good to hear that because it's different to what I'm used to speaking to people about. Out of interest, on purchase, do you use lease options? Do you use bridging? Do you do it all cash, or just combination of it all? Or are you quite creative in that side of it, how you actually acquire, or do you have a standard way of doing things? Or
Yeah, I mean, we apply the KISS model to everything we do. We just like keep it simple, stupid. Because the moment you don't keep it simple, you end up looking stupid. You know, so it's one of those. But no, we exchange. We go balls deep. You have to. The lease option stuff or the subject to crap. I mean, it's nice and it makes you feel good because you think you've got something under control. But someone takes away your train set, you got nothing, but you have something with an exchange. Yeah, that's a legal process, right? I'm now, without actually taking ownership of the asset, I'm now in a position of ownership to this asset. And that means that you're now in a position where you can sell that asset. So what we do is we tend to scale everything to operate on a back-to-back. It doesn't always work out. It's always nice if it does. So let's say we buy something, we normally exchange immediately on a 6 or 8 week completion, or a completion that suits the vendor. Sometimes it's longer. Sometimes we exchange complete within a week. You know, we move with what solves the other person's problem. But if it works out that we can get a 7 to 8 week completion, we will be throwing it straight into auction, and we'll line up the auction completion with our completion, and we'll back to back the transaction. That means we can claim, stamp duty sub-sale tax relief, so we don't pay the stamp. It means that we don't have, although we always try to arrange finance if we have to complete on it, but it means we don't have that much capital at work. It's just normally a 5 or 10% deposit. So it means that we're in a position where we can take a not too modest pot and rapidly grow it. There are risks, of course, in everything. We always have to be prepared that whatever we're buying may not sell at auction. The price might be wrong. We may have to do some work. We'll have to complete on it. We'll have to project manage something to get it across the line, or get the solicitors to do whatever it is that we need them to do. But
that's pretty hard at the minute, isn't it? Getting solicitors to do what they're meant to do at the minute.
Well, I mean, we spread the load across 3 solicitors, and we use 3 specialists for generally speaking, the type that we use. And everyone's like, "Oh, what solicitor are you using?" Oh, I'm not told a soul. I mean, it doesn't help my solicitor, but it helps me.
Yeah, definitely keep it to yourself.
That's it. Yeah. Do you want to know who my solicitor is? I'm not telling you. No. Do you know what I mean? So it's that kind of thing. And we're in the process of talking to a couple of financiers about maybe setting up a revolver fund or a hunter fund, just to basically get us in a position where we can fund as many of these things as possible and trade them out, because they will normally charge a lower APR, so a lower rate, but they'll take a slice of the profit on top. And we're not too bothered about that, because if we can buy more, we'll be earning more. It doesn't matter if someone else takes a bit of the pie. Yeah, if you're making money and someone else is making money, then something right is happening. Yeah. If you're making money and someone's getting screwed over, then you've got to reconsider where you're sitting in and how you're operating and what that means to you. But yeah, that's kind of where we're at now.
Yeah, I find it really interesting. And it's clearly working whatever you're doing, and there's got to be a lot of research behind these deals and you've got to be pretty confident if you're trying to do a back-to-back. If you're buying an auction with 56 days and or buying on the market, or whatever you're buying them, or where you're finding them, to put them straight in auction. And obviously if it doesn't go in time, you've still got to complete on that property, right? So you've got to be pretty confident in your research to make that happen. How are you generally? I know you mentioned some direct to vendor stuff there. If you find one, you'll go next door and stuff like that. Are you finding a lot at auction? Do you do a lot of like direct to vendor campaigns or stuff on the market, or is it just a combination of everything?
It tends to be a lot of it is auctions. So we use auctions.
Well, you buy at auction and sell at auction, yeah.
Yeah. And we're fairly prolific, I think. It'll be nice to do more, but it's always nice to do more.
Yeah.
But we're looking to move into a position where every 3 properties we buy, we'll sell 2 and keep 1. And we're looking at building a portfolio over maybe 2 specific asset classes. And then that's something that we haven't looked to doing before, and I haven't been interested in before. But it's starting to look like that may be, in terms of longevity, the best way to do things. But the beauty of starting off trading is that with that small pot of money that we start off with, and we've been increasing that pot, that we live a rather Spartan life, because we know that the future is this pot that we're building and what that's going to create for us. So it's slow, it's intensive. This is not a get rich quick kind of money scheme, I promise. It requires understanding a lot of different things and where things can go wrong and almost preempting them. But it will get to a point where when we start building out that, for every 3 properties we buy, we'll sell 2 and keep 1. That 1 property we keep probably won't need any finance on it. So we could end up with a completely unleveraged portfolio. Now, we wouldn't have a completely unleveraged portfolio because that's not very effective.
Yeah.
But
you can put yourself in that position so you could leverage up if needed. Like,
yeah, I mean, even if we put everything down at a 30% LTV, it doesn't, at that point it doesn't matter, but it means that we'll have greater capital to build and do more. So that's the trajectory that we're looking at, or that we're aiming for.
I love that. I think it's a different approach. It's interesting that you find a lot at auction. I personally buy a lot at auction. To hold, I don't really sell anything myself. It's mainly BRR. And when I found at auctions, like, I'm finding better deals at auctions because you generally don't have the first time. The market's so hot. You don't have the first time buyers buying at auction. You don't have the home movers buying at auction. You have some cash buyers, but it's mainly investors. And you're right, the ones where there's something seriously wrong with it, a lot of people overlook, and that's often where you find the best deals, right?
Yeah, I mean, your benefit is that cash buyers won't really be competition for you, because they'll need to be buying at X%, pence in a pound, 60, 70, 80 pence in a pound. You can buy it at a higher value, knowing that you're going to refurb it, rent it, and hold it as a cash producing asset for the next X. No, your kids will inherit it or whatever.
Yeah.
Right. So you're on a completely different metric to them. So when people are on these groups saying, "Oh, someone's definitely overpaid for this asset," well, they paid more than you, but what were you going to do with it? If I'm buying a 3-bedroom semi-detached house, I'm not turning it into an HMO. But someone who can pay 100 grand more than me in most cases, right? Because once they get, and people are like, I can't see how they're making this work. Well, maybe it's not an HMO, maybe it's social housing HMO, or maybe they're buying it to turn it into service accommodation. Unless you know what someone else is doing and how their numbers operate, you're only looking at it through your sphere of knowledge and experience. And I always say, and the trick for me at auction is, when we look at something, we're like, right, who is our competition? And we have to look at the asset and go, what other strategy can be employed here that will make money? And then we work backwards from there. We go, okay, well, this is likely where this is the barrier that they're going to be in to want to buy this property. So are we above or are we below them? If we're below them most of the time, we'll still give it a go, but we know we're unlikely to win unless someone doesn't notice the asset is there to be picked up, right? But normally if something sells for price X, we're like, oh, okay, that guy is going to do this, this, and this, and they'll still walk away with money, but we weren't going to do that. So, no hard feelings and crack on with the next deal. And for us, it's kind of, that's where we're a little bit hard skinned. It's like, okay, it didn't happen, no problem, crack on with the next deal. And that's our focus. It's always the next deal, not the last one.
Yeah, man. No, I think I love that about I've heard people say that loads. Oh, such and such is overpaid for that. But you're right. To determine if they've overpaid, it's strategy dependent, isn't it? Like, I've never thought of it like that. But you're right. You're completely right.
What are their costs? Like, what if it was like
exactly. If they're a builder, they can pay more, can't it? Because what'll cost me 25 grand, will cost them 10.
Yeah.
Yeah, man. I love that. Great point. So we've covered a lot of that. Just give us what was your best deal? Not necessarily just monetary, but a snapshot of like what you bought, what you done, and then what you sold it for. Is anyone that sort of jumps out that was a deal? Like, I love that one.
I used to talk about a deal that I did in Birmingham, and sometimes it blows people's minds. And then I realized in reality the deal was amazing, but I didn't get the best out of it. So I talk about a deal we did a couple of years ago. It was myself and my business partner Piotr, and we joint ventured with a chap called Rod Turner, who's an absolute legend, and we bought 4 workshops in like Tooting, and it basically, we bought it out of Harman Healy auctions. It was lot number 1. We bought it for 212 off of a guide price of 165, I think. Put our deposits down, which was, not a great deal of money. We got someone to finance it at, I think, 7%. The asset was yielding 7%. This was when you still had the permitted development or the prior approval for B1 C, which was like the lighting workshop to residential change of use. So we applied for it, and we got it. There was a couple of hiccups, but it happened. We then had several options. So we work on a multiple exit strategy. If this doesn't work, we move on to this exit. But every exit has to leave you positive, has to leave you, there'll be ones as you go further down those exit points that you're going to be maybe making less of a return, but it's better to have return of capital before you get return on, right?
Yeah.
Make sure the money comes back, then worry about the cream on top. But this worked out quite well because one of our initial exits was right. Well, one of the reasons why we joined up with Rod is because he's a developer. He would know how to take that asset and turn it into, muse houses, which would be worth, 450, 500,000 pounds each, right? He had that specialism. One of the main reasons why we worked with him. But the other thing was this now has permitted development to be, for muse houses.
What's a muse house? Sorry, I've never heard that.
So basically, it's basically a house without a garden.
Right. Okay.
Yeah. So it's basically just a more compact house. It's almost it's like a 1.5 to 2 story house with no garden, and it's you find them in a lot in London in heavily built up areas.
Okay. Yeah, you don't get them up in God's country in Newcastle, where I'm from. You don't get them, you see. But okay.
Up where the light is. Yeah.
Okay. Sorry.
Yeah. So we basically we got the prior approval for the change of use, and we thought to ourselves, well, let's bung it in auction. And we had an off-market agent. Talked to a couple of people before it went to auction. They're thinking, anywhere between 650 and 750, and we're like, that's 100 grand difference. So we need a little bit more certainty than that. So we thought, let's go into it with auction. We guided it, I think, at 600. It sold for 650. And I think 430,000 net before tax. 430,000 net before tax.
In how long did that take?
About 7 months. Yeah.
Oh, I mean, yeah, that's ongoing, isn't it?
It was producing income, which offset the cost of the debt, and the professional fees for the planning and everything else like that was about 10 grand. So we spent very, very little to create that kind of value, and that style of deal is something that we try and emulate as much as possible with whatever asset we're buying. Maybe we'll make 100 grand out of something, or 200 grand, or 50 grand, or 70, whatever it is. But it has to have those kind of options, that kind of flexibility, that kind of ability to add value in a short period of time. Yeah, that in recent years, that's definitely the best of the deals.
Stands out, yeah. And did you think, when you're doing your research, when you sourced that property, when you found it, were they your numbers? You were thinking you'll be able to sell it for that much of a profit, or I'm just curious to think if there's that much in it in London, like in a deal like that, a lot of people not privy to that and thinking along the same lines, or was it like a bit of a surprise that it went for that much?
It wasn't really too much of a surprise, but we always work on worst case figures. So we were telling ourselves, the muse houses would be worth, 400 to 425. but there were like 1-bedroom flats at the end of the road that had just entered the market at 450. And we thought, well, a flat's leasehold, a Muse house is freehold. It's your own building, it's your own property, So we thought we didn't put the numbers down, but I thought, anywhere between 450 and 475, it's got to sell for the same price, if not more, as more than a 1-bedroom flat. But yeah, for us, we put it down that the 4 flats would be 400 grand each. We had a GDV at 1.2. The person who bought it from us from auction went in for second stage planning to get front and rear mansards, so to increase the habitable space. I haven't checked up on how the sales are going, but I think he was listening for about 485 or 495, which for where they are is just terrific value. And it would all be end user style stock. So, the end user market at the moment is I think it doesn't really matter where you are. It's nuts. Everything is going to
everything sells.
Yeah, it's mad. But yeah, so, the people we bought this from, they'd owned it in their family for about 36 years. And they paid for like 40 grand for it or less, or whatever it was at the time. So they've made money out of the deal. We bought it, we optimized it. The person who's bought it from us is making money out of the deal, has optimized it. And the people who end up living there are going to have, hopefully a good quality home to live in. So that's the part of the process that we want to be a part of.
Yeah, man, win-win for everyone. That's what it's all about. No, I love that. Thanks for that, Jay. It's been a great episode. Just to wrap up, what I ask everybody, Jay, is the show's called The Rags to Riches, but what does being rich mean to you? Because being rich can mean so many different things. You can be rich in time, in monetary, in assets, in relationships, friendships, whatever. But that phrase, being rich, what does that mean to you, Jay?
I watched a Bob Marley interview recently, where the interviewer said, "Oh, are you wealthy? Are you rich?" And he said, "What does this mean? What does it? Do I have things? Yeah, maybe I have things. That doesn't make me rich. I think what makes me rich is I've got my small little family unit here, and I think that makes you a wealthy man. If you got the love of an amazing woman and a child that you love dearly, then you're a wealthy person. You're rich no matter what you do." I've got good friends. My business partner is awesome. There's an element of luck in what we do. And I think, having a bit of luck enriches you, definitely does. Because there are people that doesn't matter how hard they try, they haven't got that pinch of luck. So I think that's what makes me rich. Yeah.
First time anyone's answered it like that, and I think you're spot on. Because if you've got loads of money but you haven't got the family life, I'm pretty confident to say most really wealthy people, if they don't have a family and partner and children, they would swap everything that they've got to be in that position, right? I think that's pretty accurate, that statement. And you're right, you're rich if you've got a good family, good partner, good, you've got a family life and stuff. I think that's I agree. I think that's proper being rich, isn't it? Love it, Jay. It's been a cracking episode. I've really enjoyed it. Plenty of lessons in there, I feel, as well. And in regards to trading, I think you've shared some really good points. If anyone wants to reach out to you, I don't think you're on socials too much, Jay, I don't think. But if anyone wants to reach out to you, wants to follow you, wants to come to you, speak to you about your consultancy work, they want to put a property into auction, what's the best way for someone to reach out?
I mean, if I ever did a crime, I'd be the easiest person to find. I mean, I'm on Facebook, LinkedIn, Instagram. I do TikTok, silly TikTok videos.
Sorry, I couldn't find you. I thought, I didn't think you wanted too much. Apologies.
Yeah, no, I'm everywhere. I was also on Clubhouse for a period. Like, if anyone wants to find me, like you can find me.
Everywhere.
Drop me a message. I respond. Personable person, so I'll always respond. Just reach out. I'll share the links. I think maybe I have already, but if not, I'll share the links, and anyone can reach out.
Yeah, I'll put the links that you sent us on WhatsApp. I'll put those in the show notes on Apple Podcasts and Spotify. I'll tag you on all the different platforms. I've got you on LinkedIn. I'll add you on everything else now. I just had you on LinkedIn.
Yeah.
That's all. But,
Get involved. I talk monstrous amounts of shit on a daily basis, and you're missing out if you're not.
I've actually got a deal I want to speak to you about. I'm going to be putting into auction. So obviously, off air, I wouldn't mind some advice. But Jay, thank you. It's been a great episode. Have a fantastic rest of your day, and thank you for coming on.
Cheers, Terry. Thank you.
Thanks a lot, Jay.